Good morning, everyone. It's Wednesday, February the 18th, and welcome to 7 Investing Live. This is our interactive live stream event we host every Monday, Wednesday, and Friday at 10 a.m. Eastern Time to put a spotlight on several of the stock market's most intriguing opportunities. My name is Simon Erickson. You can see all of our stock market recommendations and learn more about our long-term investing approach at 7investing.com. And if you'd like to actually get started with our membership, we offer our first 7 days absolutely free at 7investing.com/subscribe. My goodness, ladies and gentlemen, what a good show we have for you here today. I am very excited to welcome my guest, Nick Rossolillo. He is the founder of ChipStock Investor to the program today. This very well might be the most insight-dense show we host all year. We're going to be talking about the cutting-edge AI chips that are going into data centers, the two-horse race between AMD and Nvidia, and then also some of the threats that might be challenging those two competitors at the top of this as well. Nick, I know I speak on behalf of everyone watching the show when I say welcome to 7 Investing Live this morning.
That is an incredible intro, Simon. Thank you. And I'm really happy to be here. I can't believe, when did I last join you on your show? Was it like 4 years ago now?
It sounds about right. Maybe 3 or 4. It sounds about right.
That's insane. That's really crazy. And actually, maybe it was like over 3 years ago, because I don't think we had started ChipStock Investor yet, not officially yet. It was the depths of the blast bear market, maybe at the end of 2022.
Sounds about right, yeah.
Yeah, maybe that's what it is. Anyways, thanks for having me on. I'm really excited to be here.
I do like
fan of what you guys do.
I love the walk down memory lane there, Nick. In fact, I remember a story. It wasn't that long ago that, you and I were chatting. You were just getting ready to start your business. And I said, hey, Nick, what sector or what, part of the market are you the most excited about right now? And you said, it's got to be semiconductors, Simon. This is before the name ChipStock Investor even existed. But man, you were spot on. This was the right sector to pick in the stock market. Certainly been doing fantastically well for the last couple of years. And I love the research that you're putting out there in ChipStock Investor as well.
September 2022. It was dumb luck, Simon. It was totally, we're not going to take credit for the timing of that whatsoever. But I do remember that conversation because it was, things were ugly in September 2022. And you were like, what I love about you, Simon, is you skew optimistic. And that is a wonderful quality. Fortune favors those that skew optimistic. But when I said that, I remember you were kind of like, oh, okay. And it was not a great time at the moment. It was not a great time to be public about saying, hey, hardware's going to make a comeback. But yeah, anyways, here we are today. And now hardware's definitely where it's at.
It certainly is. Going back to 2022, there was kind of a glut of supply. We're coming off of the oversupply from COVID when everyone was stockpiling everything. Certainly, it was at the low point, like you mentioned, and coming back around. And speaking about skewing optimistic, let's start at the 10,000-foot level here of some very optimistic forecasts of where this industry is going. Let's start with what Jensen Huang has to say from Nvidia. And we've got a graphic here, hopefully, Heather, we can put up, of Nvidia's CEO, Jensen Huang, predicting that there's going to be $3 to $4 trillion of spending on AI infrastructure that's going to go primarily to data centers by the year 2030. $3 to $4 trillion is a lot of change that you find within the couch cushions. And then on top of that, we've got Jensen's first cousin, once removed, Lisa Su, who just so happens to be the CEO of one of his largest competitors, AMD, also coming out there and saying, hey, by the way, we think that the market specifically for AI chips is going to surpass $1 trillion annually by the year 2030. These are both increases of what were previously pretty optimistic forecasts before, Nick. In fact, AMD and Lisa Su previously said that they thought the data center total addressable market would be worth $400 billion by 2027. And then $500 billion by 2028. Now we've upped it to $1 trillion. What's a couple $100 billion amongst friends here by the year 2030? If this is correct, that estimate would imply about a 40% compound annual growth rate for AI data center chips of all forms within the next 5 years, from around $200 billion today. Nick, some are calling this an AI bubble, but if this forecast is even directionally correct, we are still very, very early in a very long runway for this kind of demand for this sector.
Mm-hmm. Mm-hmm. Yeah. Yeah, for sure. The bubble. Yeah. Um, I'm always of the opinion that when like the mainstream opinion is something's a bubble, it's probably not a bubble yet. Um, Bubbles tend to be, there's a difference between like a cycle, like a growth cycle, and a bubble, right? A growth cycle being a business thing, a bubble being more of like a psychological thing. At least that's how we kind of read into that. But yeah, as far as this growth cycle goes for something that's very new, AI specifically in the context of what everybody thinks of today being AI, large language models and related machine learning type things. Yeah, we're probably like 60-70% of the way there this year towards that 1 billion or $1 trillion TAM annual each year TAM by 2030. So yeah, we probably have a ways to go in our assessment. We think it could get bumpy along the way because it is ultimately going to be a cyclical industry once it matures. And the later stages of that initial build out, yeah, we're seeing it already this year, right? Like we're seeing things like the optical component companies, some of them anyways, especially the IDMs like Coherent, Lumentum going crazy, some of the memory IDMs going crazy, and then some of the GPU and CPU providers like Nvidia and AMD well off of all-time highs from 6 months back. So it's getting choppy, and this thing is kind of sending rolling effects like a bullwhip effect through the supply chain as a result. So it's interesting to see this happen, but it's a big number. But there's so many nuanced things happening within that really massive number that's now 600 billion plus anticipated this year in data center capex and related capex from the hyperscalers. Pretty crazy stuff.
It is. And, I want to talk about NVIDIA and AMD here in a moment, but just kind of staying on the top line forecast. Of course, these are self-serving for NVIDIA and AMD. They want to say as large of a number as they can. Right now, it starts with a tree. It's a matter of time because it's a quadrillion dollars that they're going to be, market size of something like this. But a lot of people would look at this with kind of a little bit more hesitation, right? You see OpenAI out there saying, hey, we've already got commitments for $1.5 trillion, half of what Jensen thinks is going to be spent overall from itself and its partners. And now you've got the neo clouds, the CoreWeaves and such that are building aggressively as well. In your opinion, Nick, is this forecast of $1 trillion more of marketing and PR and something that gets attention out of the industry? Or do you see, in terms of the capacity that Taiwan Semi is filling up in its foundries, in the ASML orders that it's getting for equipment books, are there actual signs that there is, if this is correct, is this forecast reliable on what they're saying out there?
Yeah, I think it could be both, really. I think it could be a general financial outlook from these companies. And it could also be PR. In fact, I think a lot of what you hear these days, especially in high growth markets, technology markets, it is a twofold job, at least, to be a CEO of a company like this, signaling to your investors what's to come financially, but also trying to get more customers interested and involved in what they think is the future of computing, and maybe more broadly the future of the economy, human existence, and so on and so forth. So yeah, I think it's both. It's both items.
Yeah, it's really neat. And we spoke just this last week about the infrastructure that supports a data center. It's not just NVIDIA's chips that are going into server racks, or AMD's, chips or networking equipment. So it's the things like the power components and the cooling and the supporting infrastructure that goes along with that. And you're seeing record record long lead times for even the simple components like the transformers or the HVAC systems. I mean, these guys are booked and making things as quickly as they can. Thanks, Heather, for showing this is a lot of what's going into the data center, which is now a $40 billion plus project each time you build one of these. I mean, these companies of the world, the Schneider Electrics, you know, the Train Technologies, the Johnson Controls, they're booked. They're basically at capacity of what they can realistically supply for the data centers. It's probably a good sign that whether or not it's actually $1 trillion to two decimal places by the year 2030 or not, we are onto something here. And those that are, you know, slamming their fists on the table saying, no, this is a bubble, it's just too overpriced now. Maybe there's another optimistic spin to that, like you said, that there really is something going on, that we should be prepared for a lot more demand coming online here very soon.
Yeah, that's a good graphic. I saw your guys' episode with John Rotanti on that, looking especially at like the infrastructure beyond just the chips themselves. You know what's interesting about this? We had a piece on this, I think maybe a little over a year ago now. The interesting part of Nvidia's business, AMD's business now too, to a much lesser extent, and other, especially fabless chip designers, is they're engineering companies first and foremost. They don't do the manufacturing. Obviously, that's offloaded to someone like TSMC and their ecosystem of manufacturing partners. But the way these guys work is they design IP, they design technology, intellectual property, and then they build products with that. But rather than like a typical IP company that like ARM Holding, let's say that licenses the IP and earns revenue from licensing and royalties, these companies sell products, offload the manufacturing to TSMC. And what's really interesting about this is as this idea of what a GPU has expanded beyond just the chip itself, the IP is actually getting extended into the infrastructure itself. And this is one of the reasons why the numbers are getting so big for companies like Nvidia, is because they're actually monetizing their entire ecosystem beyond just their core IP around GPUs. They take a cut if someone wants to participate in their ecosystem and design some of this ancillary equipment that's necessary to make a data center work. Well, you're going to have to pay to play in that ecosystem. Nvidia is going to get a cut of it. So they've really, you know, I think that the term is used, Nvidia is like the architect of all of this. And what that means is, okay, if they are really the architect of the whole thing, they're making money not just on selling the GPUs or the boards or the servers themselves. They're getting a cut of the entire thing.
NVIDIA's gross margins are very high. I believe it's 70 or 80%. I don't remember the exact figure off the top of my head, but they're very high. They're making a ton of money, like you mentioned, Nick. We have seen the aggressive spending of these hyperscaler companies, of these tech companies. In fact, between the combination of Alphabet, Meta, Amazon, and Microsoft, they together spent an estimated $364 billion on combined data center infrastructure in 2025. That's not all just AI chips, but overall. 364 billion is a third of $1 trillion on data centers last year. One that's noticeably absent from that list is Apple, which is interesting to me because Apple is equally as large as those other companies, but it's not spending as aggressively on CapEx. We have a chart here that actually shows Apple compared to the others on how much they're spending. Their capital has significantly lagged those of their peers. In fact, if you look at this, Apple on CapEx, this is a standardized quarterly capital expenditures. You can see Amazon up 42% year over year, Microsoft up 89% year over year, Alphabet plus 95%, Meta plus 48%. These companies are now spending over $100 billion annually on CapEx, whereas you see Apple pretty flat there, not participating in the aggressive build out of capital expenditures for its data centers. Now, part of this, Nick, is obviously Apple is not a cloud infrastructure provider like Amazon Web Services or Google Cloud is. We understand that, but it also feels like Apple has been very good at waiting for the components that they are using in their products to decline significantly so they can get economies of scale by purchasing in very, very large volumes and then getting that price point to be affordable for a consumer. And I've said that with the iPod when they had memory that all of a sudden could put a zillion MP3s on a very small device that would fit into your pocket. And then, of course, with all of the different components that would go into an iPhone as well. Do you think that there is going to be a commoditization of AI chips, or at least cutting edge computing, in the next 5 years that might keep the top line growth still intact, but the prices that the Nvidias and the AMDs of the world are able to charge perhaps a little lower? Is there a good chance of that happening, do you think?
Absolutely. That's the beauty of the semiconductor industry, right? What we're working with today as cutting edge does become commoditized. It gets cheaper, and that's what helps it proliferate into more of the economy beyond just the cutting edge, highest of high tech companies. That's kind of by design how semiconductors operate. It's an industrial process. It's an industrial part of the economy. So yeah, absolutely. There will be, to a certain extent, a commoditization of these things. Prices will come down. There will always be something more cutting edge coming out. But yeah, like you said, the growth will stay intact. It will slow as it matures, for sure. And perhaps Apple has a play here. Yeah, and kind of interesting getting your take on this, because in preparing this, there was a bit of some talk about what Apple might do with this, how they might eventually implement AI, an actual AI effort into what it's doing now at some point in the future. Maybe they're just waiting for some of the pricing to come down, where they can wield that control, like Apple does, wield that control over their supply chain. How do they do it, though? I think that's the big question. I mean, obviously the market is pricing in something for Apple because it does trade still at a pretty premium price. The market expects profitability, cash flows to remain high for quite some time. So you have to assume the market is factoring something into the equation for Apple. But what does that look like, I think, is the biggest question from me that I ask.
It's been the interdependency with Apple and Taiwan Semi for years now, right? I believe that 20% of Taiwan Semiconductor's revenue last year was tied to production of components that went into the iPhone or Apple devices overall. 20% of a company that's that large, the largest foundry in the entire world, went to Apple. It's like wherever Apple sends the industry, that's where the industry goes. Whether that's virtual headsets, whether that's an iPhone, whether that's a new, whatever device it's going to look like. It feels like there's going to, in my opinion, and feel free to disagree with this if you'd like, Nick, but I think that there's going to be another kind of inflection point of the computing power of the chips that go into an iPhone. I think it's going to look more like an AI chip that's going into a data center today is going to be on the device. That's what Apple is going to host locally, if not offloading to the edge, rather than just straight to the data centers that are so centralized. And that's just going to be the most cutting edge that the Taiwan Semi can produce. Is it 1 nanometer? Whatever the size of the transistors they can get these things down to, it's going to be the best of the best. And Apple's going to say, I want a boatload of these. And if you want them, you got the contract.
We have seen some early efforts into this. What is the device actually going to look like? The Vision Pro was kind of a bust. Not super surprising given the price point on that. So maybe it was just kind of an experiment all along. The other thing I think we need to think about with that is there's probably going to be some succession planning factored in, and whoever succeeds, Tim Cook, will probably have some sort of say on what the future of Apple looks like in this AI era once it's ready to kind of proliferate into the edge device itself, into the iPhone or whatever it is they're going to do with the thing.
Yeah, and let's not forget also that OpenAI hired, Apple's chief architect, Jonathan Ive, is now working with OpenAI. I'm not sure the relationship. I believe it's some kind of partnership they've got, but the goal is to produce an AI-powered consumer device that would leverage all the power of AI, but it still be something you can carry around with you. It's going to be interesting to see how that all plays out. Let's get back and talk about the chip makers, though, Nick. Being ChipStock Investor. Before we jump into AMD, which I want to talk about in just a moment, can you tell us a little bit about your site and your business that you've created? I know the website is chipstockinvestor.com, but tell everybody that's listening from our audience, what it is that you're working on these days.
Yeah, that is now 100% of our time. Very, very small beginnings of a business there. And that is where we post our research, primarily research. And then ultimately what comes out of that research is, once in a while, there's a stock pick that's made, an investment decision that's made. So that's what we're working on. We have started out as a little social media community, but here just within the last few months, we actually launched a web-based application. So it is very new. It is very, very raw at this point, and a lot of things that we're working on to make it better and also add features soon. So that's
I thought it looked good, man. You said it's raw. I was like, I'm surprised that was a new website. You've done well with that already for it already being out. I thought it looked really good.
Oh, well, thank you. The premise of the whole thing being just understanding this technology, which is now actually quite old, 70 some years old now. Semiconductor, when the semiconductor devices were invented in Silicon Valley. For a while there, I think everyone forgot why it was called Silicon Valley when cloud software was the rage last decade. But it's like high time that literally everyone in the world, and especially in the investing world, no longer has that fallback that I'm not really into computers. I don't really invest in it because I don't understand it. Like this is well ingrained technology that you have to understand if you want to get a handle on the world we live in now, and therefore how to invest. That's kind of the ultimate overarching goal of this thing.
It is. And speaking of it being a market you need to invest in, this has certainly been one of the best performing sectors of the market. I do want to talk about AMD perhaps setting the bar a bit high for itself here. We go back to Lisa, and she's coming out with her $1 trillion market forecast for the year 2030. Lisa Su, AMD's CEO. She was also, along with those estimates, assuming that AMD was going to grow at about an 80% annual compound annual growth rate for revenue over that 5-year forecast window. 80% for a company the size of AMD for its AI data center division. That is one heck of a four. You're coming out with your guns blazing if you're going to say that kind of revenue. Now, AMD stock sold off on its fourth quarter earnings because, get this, Nick, it only grew its data center revenues 39% over the previous year. And then its overall growth rate of 32% when you consider all the chips together. They just launched their new MI300 series. This is the Instinct GPUs that they're selling to the data center. But I know that you've had a chance to look at the AMD numbers. The stock is down from that earnings report. In my opinion, there was a lot that looked good, but maybe it was just a little bit too high of a bar. When you come out and you say something so aggressive, you just don't quite hit that number. But what stood out to you from AMD's most recent fourth quarter results?
I love this conversation because there's so much psychology involved in this. Yeah, the bar was set very high
by herself. But she set the bar for herself very high.
And usually, like when you're going to make statements like that, you maybe like in the boardroom, like the bar is really high. But then when you come out publicly and say what the bar is, you lower it a bit so that there's like, some margin for error and not getting investors too pumped up. I love this topic though, because I think we get a lot of flack, mostly because most people don't watch all of our public videos, but we were pretty critical on AMD up until April of last year when it got washed out by the tariff tantrum. And that was really healthy at the time because the market basically discounted Lisa Su's comments for her. What if we don't hit those marks? But now, especially late last year, we had the agreement with OpenAI, the agreement with Oracle, and those expectations have been ratcheted back up again. And so it's not super surprising that when the numbers came in softer than expected in Q4, the stock price has come down because it is definitely kind of a prove it moment for AMD. The Instinct 300 is out. The 400 series is coming. They have a very aggressive pace of new product launches, just like Nvidia does, to try to keep pace with this. And so when that very high bar is not met, of course, the stock needs to discount that from the price. That being said, if all the things they've said about these new product launches and some of the new partnerships they have with OpenAI and Oracle come to fruition, there's no reason AMD can't be a good investment over the next 3 to 5 years during this very, very large pace of AI data center build out and expansion. But where we get critical with AMD is because it's not the lead horse in this race. It's not, as we call it, like tech, we don't talk about moats in technology in our, our methodology. We talk about who's the fastest car. We developed it watching too much Formula One, Drive to Survive. If you're in pole position in especially a new technology market, if you're in pole position, which NVIDIA is, everybody else is at a severe disadvantage. The probability that you can pull ahead and win that race is actually quite low. Probability is very high for the pole position. So that's kind of where AMD's at. They're not the lead car. And as a result, we would really like them to talk more about all the other products they have as well, the more mature products, including the CPUs, which are actually really quite exciting and continue to take market share from Intel and x86, and lean into that more. Because when you're not the lead company, you really have to work extra hard to control your expenses and make sure your profit margins are high, because you can't just rely on massive growth like the leader in a new market that owns the majority of the market share.
Nick, that was fantastically said. I think I'm going to rewind and rewatch that segment about 10 more times. Just the insights that you had on this. It's spot on. I can only imagine what the Thanksgiving Day dinner conversation is like between Lisa sitting on one side of the table and Jensen on the other. They are first cousins once removed, but this is like the most intense family rivalry that I'm aware of out there. You've got AMD and Nvidia fighting to be the top dog in this industry that's going to be worth $1 trillion by the year 2030. As we know, Nvidia is the leader in this space. They are the top dog, like you just mentioned. Nvidia released in its third quarter results that it had grown the data center revenues by 66% in Q3 versus the number that we just said, 39% for AMD. And NVIDIA was from a much larger base too. So it is clear that NVIDIA is winning in this sector of the market. And I can even remember from a couple of years ago when I would go to the conferences and I would see AMD, they would have product executives from some of their segments within AMD talking about how they wanted to build out this giant buffet of options. They called it an IP buffet, intellectual property buffet, that would suit any customer need that would possibly approach them. And that's why they went out and they made the $40 billion acquisition of Xilinx, which they're still amortizing. It's flowing through their earnings and their income statements even today from several years ago, because they wanted to have FPGAs. They wanted to have the EPYC 4 CPUs. They wanted to have the Instinct GPUs, wanted to be a little bit of everything to everybody, because they knew this market was going to be very, very large and very complex, and customers were going to need different solutions. And as you just so perfectly mentioned there, Nick, that is very different than NVIDIA, who has said all in GPUs, parallelism. This is where the AI data center is going. And right now, there's no catching them. Even though AMD is a competent competitor, as the distant, first removed first cousin, they are not AMD in this race. And I would agree with you that I think this is NVIDIA's market to continue to win, at least here in the short term.
And on that point you made, on the FPGA side of the market with Xilinx, they have yet another best-in-class product. The old Xilinx name, the old Xilinx brand, FPGAs, you will find all over the place, especially in the high-performance markets where FPGAs are used. For example, within the semiconductor ecosystem, FPGAs are used heavily in EDA software, the basically AutoCAD of semiconductors, to borrow a term from someone that used that. It's fantastic analogy. Those FPGAs show up there. So, like, point being, AMD has best-in-class products. Yeah. I am critical of them throwing money at trying to play this catch-up game with NVIDIA in GPUs, because if we can extend our analogy a little bit more with racing, with Formula One. What tends to like depose a leader that has an advantage is when the rules change, when the landscape shifts out from under what is currently the hot market right now, accelerated computing, accelerate everything, and something changes. And that allows a new competitor to come in when the rules have changed and do something different. And it would seem it's not a complete 100% shift in the way things are done. But if we want to like really get technical about who's like second place to Nvidia right now, you could make a really, really strong case. It's actually not even AMD at all. It's actually Broadcom providing the IP for companies like Google, Alphabet, and the other hyperscalers as well, designing their own custom application-specific integrated circuits, ASICs or XPUs, and accelerated compute ASIC. Google's Tensor TPUs, Tensor Processing Units, being the big product win for Broadcom over the last decade. And those are starting to ramp up because these hyperscalers are thinking about controlling their supply chain, controlling their expenses over the long term. And a company like Broadcom is obviously making some great money at that. And those are really interesting products because it's application specific. Some of those pieces of custom silicon are accelerators. Some of them are a CPU replacement. And so now you have like competition coming from Broadcom IP, Marvell technology to a lesser extent in that market. For AMD coming not only just from Nvidia on GPUs, but also on the CPU side as well, where they're still making most of their bread and butter these days. So I think that is another consideration for AMD investors, as optimistic as we might like to be about it, because they're that IP buffet, as you said, Simon. That's fantastic, but it also opens the door for would-be competitors or successful competitors to chip away at your lead on multiple fronts, not just one front, basically like what NVIDIA has.
It's a great point. You know, if you're large enough to design and to manufacture your own chips or hire someone to manufacture your own chips because you've got them for a very specific purpose, why pay NVIDIA or AMD 70 or 80% gross margin to do the design for you? You know, if you want a TPU or an XPU or whatever PU you want it to be, because you've spent the design work for it, you spent the $50 million, you've hired the teams to get it out there, and then you just go to Taiwan Semi and say, manufacture this for me. Certainly the Googles and the Amazons and the Microsofts are scaling up their own internal designs as well. Great point, Nick. I want to talk about another one. You know, we're coming up on the end of the program here. In fact, I think we've already run past the half the hour, but I'm going to keep going because I'm having a really good time talking with you about this. But I want to talk about one other company called Cerebras. This is an interesting one, Nick, because we're talking about, you mentioned about the Formula One. You know, you've got a car that's racing around a track. This is a very high speed race that you've got going on here. It's almost like rather than taking a pit stop, you're replacing the entire vehicle. You're getting the driver out and you're, driving something entirely different. We've seen the roadmap of these companies going very quickly, and the product releases and the architecture is changing very quickly, right? You had first, I guess it was the MI 300 series from AMD in late 2023. And then you had Blackwell from Nvidia in 2024, the very next year. Then now Nvidia has come out with the MI 350 series in 2025 last year. And now we've got Nvidia Rubin coming out this year in 2026. And then AMD has already said that it's going to have the MI 400 series in 2027. This is almost like you can almost always, how do you know when to deploy this? If you're, buying these chips, you do what you can right now because you've got to, knowing that something better and faster is going to come in the next year? Or like, how do we justify the CapEx forecasting of these large companies that are spending hundreds of billions of dollars? I suppose you just got to do what you can at the time, and then also build out a roadmap of what's coming up in the future. Is that a fair assessment of what's going on if you're spending tens of billions of dollars on these things?
Absolutely. Yeah, it's a big question. Like, is this a sustainable number? That's what the market is essentially questioning at the moment. And no, absolutely not. It's not sustainable as a percentage of revenue or as a percentage of OpEx or whatever. These capital expenditures cannot continue at that high of a rate for forever. This is why we call these industries cyclical, though. Eventually it will moderate. Profitability will rise again for the hyperscalers. And when it does, it will probably rise to unimaginable levels. This is why we kind of call like our Nvidia position a soft hedge against the hyperscalers. If they're spending all this capex, that benefits the whole semi industry. But when they turn the capex off or dial it back, bad for the semis, but fantastic for the shareholders of the hyperscalers. They're going to make a lot of money because the AI revenue is just hyperscaler revenue at this point. I think a lot of investors still are looking for like an AI company delivering tens of billions, if not really hundreds of billions in revenue. It doesn't exist yet. Even the leaders, OpenAI and Anthropic and so on, they're not there yet. But like all the revenue from this new batch of AI companies and then some, a lot more, is actually embedded in the hyperscalers themselves, in their cloud revenues, and even beyond that, their own revenues themselves. They've used accelerated computing to get more efficient. Meta is a perfect example. Zuckerberg's year of efficiency. I mean, that was fantastic when they dialed back the expenses to show off. Hey, look at all these investments that we've made. Look what it can do when we're done spending. They're accelerating all sorts of internal workloads to deliver more of the right ads to the right user at the right time to make that ad more valuable, both to them and to hopefully the advertiser using them. That's all also AI. It's some machine learning process. So the market focus on what is AI and what needs to happen to justify this is too narrow. But is it sustainable? No, obviously it's going to need to moderate as a percentage of the revenues. But at this point, if you're a shareholder, you have to trust that these companies know how to allocate capital. I think they've proven that they know how to do that, and just trust that there's going to be a payoff at the end of this.
The ROI on it, certainly. And then the last thing that I want to mention too, this is more of just an innovative cliffhanger, if you will. We don't have to have too in-depth of a nerdy conversation about this, but it is interesting, worth pointing out that just the way that processing and computing is done has changed significantly since NVIDIA released the GPU, right? It wasn't just CPUs running code in series anymore. Now you could actually split it up into parallel. And GPUs, which could do floating point operations, which was a gradient, a lot of times for video processing or things like color, were much more efficient at doing the math, the matrix math that was necessary for machine learning. And this is kind of the birth of modern AI computing. But there's a new company now on the horizon that's doing a very different approach to this, Nick, and it's called Cerebras Systems. They have mentioned that they want to go public here in 2026. The IPO got delayed a little bit because of some investigations on what they were selling to the Middle East. But let's put the picture of it up in here, the wafer, if we have it, Heather. This is not just a 12-inch wafer, silicon wafer. This is a massive wafer-scale engine, they're calling it. Look at how huge this thing is. This is a much larger chip than you've gotten, a much larger wafer than you've gotten used to seeing from the NVIDIA GPUs. And they're basically bypassing the parallel load balancing of splitting up the functions that NVIDIA's GPUs are doing. They've just got now these massive chips. Rather than having a zillion GPUs, you can have a fewer number of a Cerebras chip that's in there, and it's perfect for AI inference because it's a much more efficient way of processing than NVIDIA's parallelism. I don't know if you have any thoughts on this, Nick. I'm kind of pulling this out of the blue, but just the innovator in me is very interesting to see these forecasts of $1 trillion when you're talking about that kind of money and that kind of CapEx spend. Every percentage point of efficiency matters tens of billions of dollars to your company. And I just think it's a very interesting time for a company like Cerebras, or even the quantum computing guys like IonQ. You start seeing these different types of computing architectures or different types of physics themselves, quantum physics versus, traditional silicon physics that we've used, now being introduced creatively into this market because design matters more than anything. Before I let you go, do you have any thoughts about innovation in this field, whether it be about Cerebras, whether it be about quantum computing, or even anything that you're interested in watching in the chip market as kind of this continues to evolve out there?
Simon, I will not hold you up with all of my random thoughts on this stuff because we have too many of them. We actually did a public video on Cerebras almost 2 years ago now, when they were originally thinking about having their IPO. There are physical problems with these wafer scale. It's not, like you said, it's not an individual chip. It's the whole wafer with the round edges cut off to make it into a square. There's physical problems with these, that physical challenges that need to be overcome, both in the manufacturing process and also in ongoing operation of these things. Makes it very challenging. And then everything else on top of that, you know, like Jensen explains, like AI is a full stack problem. It's not just the chip itself, it's also how it fits into the data center architecture overall, how the software is designed to actually operate and use the chips to get computing work done. There's a lot of things here. The report I've seen probably has Cerebras possibly growing pretty quickly in 2025. It looks like they were maybe just shy of $1 billion in revenue, which is like a rounding error in the CapEx numbers we're talking about now. Definitely a rounding error if companies choose to utilize Cerebras via a cloud, rounding error in operating expenses somewhere. So yeah, they're growing quickly, but at this point they're in R&D phase. They're looking for companies that will come up with use cases for their chips. That was the Nvidia moment. Up until a few years ago, they had a sizable data center business that most people were overlooking. It was, you know, $4, $5, $6, $7 billion per year. It was steadily growing, but there had to be a killer application that got everybody to move on it and say, okay, we see the economic value in buying these things and installing them in our data centers. That was the so-called ChatGPT moment at the end of 2022. For a company like Cerebras, that is a difficult thing that they're also going to have to do. You can land sales and that's great, but as long as you're stuck in this R&D mode where your customers are really they're not using you on a commercial scale, they're just experimenting to see what'll work. It's difficult. It's a difficult phase. So yeah, we're interested to see what happens. That's just kind of from a technological standpoint, and early business standpoint. That's very much where Cerebras is at right now. In spite of some of the PR out there about companies using their chips, it is definitely mostly an R&D experiment right now.
Absolutely. And I think we'll leave it at that, Nick. This has been a fantastic show. We've discussed, thank you, Michael, for the question about what stocks are we discussing the most or the most interested in right now. We talked about Nvidia and AMD on that. NVDA. AMD is the ticker for AMD. And then we also mentioned IonQ, and then Cerebras might go public here in 2026. A lot of innovation happening in CPUs and GPUs and TPUs and quantum computing and in wafer scale engines. Whatever your flavor of innovation, there's plenty of it going on in the semiconductor space. And a thank you, Nick, for being a part of our 7 Investing Live show here today. I had a lot of fun with this conversation. I really appreciate you being a part of the show here. And if you'd like to follow along with Nick, he's got ChipStockInvestor.com. That's his website. He and Casey Rossolillo doing some fantastic work there. I'd encourage you to go check out their website whenever you get a chance to. And we will be back again next week. We're going to be taking off on Friday. We're going to be talking about AI once more, some off-the-radar AI companies with Eric Bleeker from 24/7 Wall Street. Going to be an interesting conversation with Eric as we continue this deep dive this entire month into what's going on in the tech world. Again, thanks to Nick Rossolillo from ChipStock Investor. We will see you again next week. In the meantime, be safe out there and have a great weekend.